Okay, so 10 charts that show where the economy is heading. And I want to go over this with you. You may have in discussions right now with your family and friends. And let's jump right in. So it says 1 year into President Trump's term, AI spending is up, gas prices are down, and inflation is complicated. All right, what do we got? Despite a series of road bumps, the 2025 economy proved surprisingly steady. Well, I'll always say it depends who you ask. Americans kept spending. Businesses kept investing, especially in AI. And this is going to be a running theme as we go through this stuff. As you can see, like there's just a bunch of money going to AI, as we talk about a lot on this channel. And I'm always skeptical of what's happening and how much money is there. Other bright spots for the economy include gas prices that hovered close to $3, unemployment rates that stay close to 4%, and Americans saving about 5% of their paychecks each month. And out of these three, I keep telling you guys, I think unemployment is going to be the key number to track as we go into next year. We also have, but there were concerns. Home sales remained sluggish, manufacturing contracted, and amid tariff uncertainties. And you have, despite relatively stable metrics, Americans growing easy about the state of the economy. And you'll see it in the numbers with the crashing consumer confidence metrics. And I want to hear from people in real estate, because we have a lot in our community that do that. Is it true that inventory is down in your market? I keep hearing that, and I do keep hearing that there's just not a lot of activity for buying or selling. But I want to hear from different markets because it depends which market that you're in. What comes next? Economists are watching closely for signs that a slowing job market or worsening inflation could derail growth. They're also keeping a close eye on whether Americans' glum outlook on the economy begins changing the ways they spend and save. So here are 10 areas economists are tracking to gauge where things may be headed. All right, let's look at the charts here. Inflation, it's been a bumpy year for inflation. So looks like it peaked out at around 9. The last read we got was 2.7, but I would take this at a grain of salt because this was incomplete data. We also had a gap here. So it was like September was 3% inflation read. And then there's no October reading. And then we got this crazy reading at 2.7 with, incomplete data delayed. So I wouldn't take this number too seriously. And even if it is real, I'll be clear on this. I think unemployment is the more important number at this point. So, and we'll see what happens to go into next year. So they'll say here, inflation was at 2.7% as of November, spent most of the year higher than what Americans or policymakers would like. Inflation has come down significantly from the post-pandemic peak of 9%. Yep, we talked about that. A number of everyday costs, including electric bills, used cars, coffee, picked up in 2025. And I keep hearing this a lot from a lot of people that yes, your electric bills are really high. When you look at some of this other stuff, so they're going to mention used cars, coffees, TVs, and stuff like that. Sometimes when you do the inflation reads, you're going to look at a lot of categories that you may not necessarily think about every day. Like how often do you buy TVs? You don't buy one every day. How often do you pay your electric bill? Right, monthly. Right. What about coffee? Well, you probably know the cost of that every day. Actually, if you do drink every day, and a lot of people do. So that one you would actually notice. Used cars, you may not necessarily buy all of the time, right? So this is sort of why the numbers of inflation when they move up or down or whatever, you're like, well, that's not what I'm seeing because you don't necessarily pay all the categories that are tracked, clothes or insurance, these kind of things and you'll know. And I always say the same thing with this stuff is tell me what you're seeing in your neck of the woods. Groceries are the ones that people would notice the most though, right? And it's going to be fluctuating a lot because he's messing around with tariffs here. So they mentioned coffee, beef, bananas, tomatoes, and such. And one of the big problems with their logic with the tariffs with the Trump people, they're saying, hey, if we put tariffs on, said industry or product, then they will, produce stuff in the USA. But it was flawed because some of these things, like say, we'll use the example of bananas or coffee, you can't necessarily make in the USA that easily. So, and actually my wife, we were talking about this, if you know Korean food, it's called gim, it's basically like a dry seaweed. And that kind of thing you can't get so easy in the USA. And she was mentioning something it was news here in Korea. What's going on with tariffs on that? And I don't think there's any tariffs at the moment because maybe that was part of the deal to where Americans, eat more Korean food these days and really like gim, but so like your dry seaweed. And because you can't get it so much in USA. So point being, the Trump and the food stuff, it doesn't really make sense when he talks about that tariffs. What does it say here? It says, it's too soon to tell whether inflation will continue cooling Some economists worry that the president's policies could drive up a variety of costs, including imported goods and healthcare premiums. And I keep hearing healthcare is through the roof. And actually, we saw that last report. They're saying more people are spending more on healthcare. So it's really expensive out there these days. Policy out of Washington is the biggest wild card. Someone from Moody said this. There are all kinds of proposals, from the 2000 stimulus checks to Trump accounts and more checks for farmers, all of which comes with costs and complications. So it's funny because the MAGA cult and then Trump people, they always talk about how much they hate government handouts, stuff like that. But I guess if Trump's doing it, then they're okay with it. So there's that. It's laughable. Job market. So this is actually the important numbers to take a look at. There's a lot of important numbers. You don't understand all of this stuff. But we had a negative, 105,000. When was this? This was October 2025. You had a read of 64,000, created in 2025 November. Now, remember, though, that Jerome Powell said these numbers could be off by as much as 60,000 jobs a month to the downside. So that would mean many of these numbers is nil or negative. So that would change everything considerably. And I think January, February are going to be the key months to look at. We'll see when employers come back and everyone comes back to work. Now the holidays are going to be over soon. Will we start to see mass layoffs? I think that the last one I saw that was a bigger one was Verizon. I know was laying off, and you'll hear it from various tech companies these days. But we'll see if it spreads into more. This says here the job market cooled significantly in 2025, with employers adding less than 1/3 of the jobs they did in 2024, right? And you'll see it in the chart here. So there's just less jobs added than in the past. So it's really slowing down. Unemployment has edged higher. Laid off workers say it's becoming harder to find new jobs. Economists say it's unclear where things are headed. Some expect hiring to pick up at the turn of the year. Well, we'll see. While others say Americans could be facing several more months of rising employment. So I'm in that camp more. Still, one thing they can agree on is the fate of the economy largely hinges on what happens in the labor market, right? So if people don't have jobs, they don't feel good about the future, they're not going to go out and make any purchases, right? So if you were, let's use an example of refrigerator company or car company or whatever, and you'll know whether or not business is booming or not, right? You'll know if cars are sitting on the lot. You'll know if, Best Buy can't sell anything because we're all related here. If we don't have work, we're just like, I can't afford to buy anything. Or even if you could afford to buy it today, you just, the thing I have now works fine. I just don't need to make a big purchase. So this is stuff to track. We are not expecting a hiring boom, is another person. We are not expecting a hiring boom, but we are looking for some thawing from this no hire, no fire environment. So we'll see what happens coming in January, February. Here's a chart on AI. AI-related investments, U.S. data center construction by megawatts of IT power demand, right? And so you have a lot under construction right now. This 2025, a little bit completed. And it's interesting when you look at this stuff. But they do this by power, though, by megawatts. One thing I'll say here with this under construction thing, I'm not sure if this includes if they would have taken out the wind power stuff or not, because remember Trump recently canceled, I think I want to say it was 15 wind power projects around the country, really hurt people in the Northeast, and it was invested billions of dollars in this thing, not finishing is like the worst situation. I wonder though how many of these projects in this realm, this is AI related though, it's not just power, but AI related, if you build a bunch of half-built data centers that you can't use at all, and I think that would be a disaster because you spent all this money and then you'll get anything in return. Then you're just like, okay, do we finish it or not? And even if we do finish these said things, I said these are all under construction, I guess, it's going to really hurt people in the labor market, in my opinion. So I know I was talking about wind power here, but they're talking more about data centers. Let's see what else it says. It says business spending on artificial intelligence has juiced the economy in a big way, right? A lot of money is going towards that stuff. Investment in information processing equipment and software accounted for the majority of growth in domestic product GDP in the first half of 2025. Firms have invested billions in data centers and new technology in hopes that AI will revolutionize the economy. By 2030, industry and government projections show data centers could account for more than 10% of the nation's power usage. So that's quite a bit. And again, that's why I know the chart shows data centers, but my into my mind was like thinking about we're canceling, wind power when we need more power in general. The Trumpy people try to convince you that coal is the answer. I disagree. I think we should do lots of other things, try to keep as clean as possible. I'm not against nuclear, but just make sure that it's regulated and safe, and we got our literally our best people on that stuff. Because if you screw up nuclear, it can be terrible for everyone all around. Here's a quote here. So far, AI has been powerful tailwind for growth. If productivity starts kicking in, does that mean we lose jobs, right? That's a key question. Or on the other hand, if that doesn't happen, will investors say, oh my gosh, I've overpaid, which would knock stocks down and pose threats across the economy? We just don't know. And we're gonna see on that one. I'm very skeptical of much of the AI stuff. I know a lot of these companies are not profitable, and they keep trying to raise money, borrow more money, and they promise that they're going to be profitable by like 2030, that kind of thing. So what, about 4 years from now is their promise. Or that'd be more like break even, but who knows what happens in 4 years. AI related spending contribute to about 14% of third quarter's GDP, right? So when you look at the numbers, a lot of that is AI stuff. Okay, what about borrowing costs? Where are we there? Because we need to get people spending, right? That's the idea. Credit card rates, 19.8%. So that's as of December 2025. It's really high. And I would imagine some people are in the 25 to 30%. So this is because this is the average, right? So that means some people are going to be below this. Some people are going to be above this. And if you go to, for those of you who are not in USA, you don't know, if you go to poorer communities in USA, there's a lot of predatory type businesses that are check cashing places, loan shark kind of stuff. And they could be hiring, having even higher, percentage than this. It's, in my opinion, this stuff is really, really predatory. So very, very high. I do understand though the concept if you make it too low and then you got too easy to get all of this money into the market, and this is also to protect them from risk. But yeah, it is quite high, and pay that stuff off first. Basically, long story short, what else you got here? Average rate for a 60-month new car loan 7.6. So used car loans should be higher than this, I would imagine. And it doesn't list it here what the average is, but that's for new car loans. This is on the 60-month loans. Some people these days do even longer than that, which is really crazy. My opinion on this stuff is always pay cash for cars. If you have to get a loan, get a cheaper car. That's my opinion, because you're talking about a depreciating asset, and we want to call it asset. We'll call it a black hole, and you're paying interest on it, so it's crazy. You also got home 30-year fixed mortgage. Average 6.2%. And we're going to see where that goes. And this is actually a big issue as well. The effective federal funds rate, 3.6. Generally try to keep this a bit above inflation. And Trump wants to get this below inflation, basically making the cost of borrowing money cheap and getting this thing all borrowing money. And that could effectively overheat the economy. So that's sort of where Trump's plan is. Trump, it literally says right here, Trump has made it clear he'd like interest rates to fall to zero. So then it was all borrowing. But rates have remained stubbornly high for much of the year. Generally, higher interest rates help slow down the broader economy, playing a key role in keeping inflation in check. With inflation and inflation holding fairly steady throughout much of the year, the Federal Reserve lowered interest rates 3 times before hinting at its December meeting that it would stay put for a while, right? Here's a quote from Powell. We're well positioned to wait and see how the economy evolves from here. Interest rates have edged down for the past few months, as we just looked at in the chart here. What about home sales? And I want to hear from people in real estate. So my understanding is it's just not a lot of inventory, and things are really slow in that industry. So home sales have remained low this year. Number of existing homes sold each month. Okay, so this was back in January. 6.6 million homes sold in January 2021. Then you had another January 2022. Was that 6.43 million? So this has been a month. We're at 4.13. So under 5 million. Yeah, it's really gone down. You guys can see this the last couple of years. So for those of you in real estate, you've probably noticed a major swing in business. And I would imagine, actually, I do know. I was thinking about my one friend in real estate. He's actually out of real estate, and I'd be curious. I'd have to think about this. I ask him if when he got out is like literally the same timing as this chart. But I think I've been hearing that people are getting out. And then I know we reorganized recently the fee structures on realtors. But do you want to hear from people on this? My understanding is that inventory is just so low right now. Home sales stayed sluggish throughout the year, making 3 straight years of subpar performance. Okay. Top concern suppressing the market is high costs of what some are calling affordability. Yeah, homes are too much. Home prices have risen. Mortgage rates remain relatively high. And would-be shoppers are feeling the impact of high costs in other parts of the life press on them, right? Builders are dealing with rising material costs and labor costs. And Trump's like basically making things elevated, So we have less people to build said homes, and then we're putting tariffs on, say, stuff from various countries. So parts that you need could be Canada, could be China, could be Mexico. We continue to expect weakness in the housing market during 2026. Okay, as mortgage rates are expected to remain relatively high during the year. Some experts, taking a different point of view, are optimistic that things could start turn around in 2026. Well, we'll see. Inventory crunches are starting to ease, and this would be depending on which market that you're in. Housing is very cyclical, he said. People want to downsize. Some people to upsize. There's always life-changing events. Okay, manufacturing. U.S. manufacturing is shrinking, and we saw that in the last jobs report. I remember seeing that. A reading of under 50 generally signals contraction, over 50 suggests growth. So you can see this, it's going down. So Trump promising more manufacturing jobs. It just doesn't appear to be happening. And that's a tough trend to reverse. U.S. manufacturing has slowed this year as tariff uncertainty drags on the sector. And that's Trump, right? Economic activity shrank for 9th month in November. Okay, that's from the Institute of Supply Management. Trump is visiting the widespread tariffs as necessary to bring back the, quote, golden age back to American manufacturing. A sector has shrunk significantly since its heyday last century. That's how it's written. White House leaders have said the process will take time and may include some short-term pain. Good luck with that. Some businesses have benefited. Many are struggling to deal with higher costs on imported goods. And I'd be curious which one's a benefit. Look at that. The job gains gained by protecting sectors like steel and aluminum, for example, were far outweighed by losses due to inputs becoming more expensive. Yeah. So in this situation, it depends on which kickbacks Trump is getting, et cetera. Right? You may or may not get tariff reliefs. 2/3 of the panelists surveyed by the Institute of Supply Management said that companies were, quote, managing headcounts rather than hiring. The manufacturing industry's fate next year is tied to that of Trump's tariffs. And that's in the Supreme Court right now. GDP, the economy is growing again after a brief slump, but a lot of this is AI. And then I think you're going to have a real, we're going to continue this K-shaped economy, but I think you're going to have just a continued wealth gap in the U.S. So regardless of what the national numbers say, just think of it, the easiest way to think about it is like, hey, GDP's up because, Microsoft's building a bunch of data centers to replace you. Great. So yeah, sure. Some people may benefit, but not necessarily everyone. That's why they refer to it as K-shaped. So far in 2025, economic growth is looking like a bright spot. Okay. Despite broader uncertainty, after a dip earlier in the year, the U.S. economy grew at its fastest pace, but economists caution the pace is unlikely to continue. Summer boosters driven mainly by consumer spending and the rise in net exports. If U.S. companies sold more industrial supplies, pharmaceuticals, and gold abroad. Yeah, it's actually, we don't talk about gold that much, but that is a big thing these days. And I think gold and silver reached highs. Economists forecast that GDP will be show tepid, if any, growth in the current quarter, largely because of spending and investment hit the lengthy government shutdown. And then you also have the crazy imbalances in the swings, because a lot of companies imported a whole bunch of stuff before the tariffs, and then that skewed the numbers. And then going to next year, you're not going to have that, right? If the tariffs are fully kicked in, so it covered up sort of what we're experiencing on the ground. The gas price situation, it's going to depend on where you are in your neck of the woods. I think Texas, Oklahoma, some of the states like closer to where it is going to be cheaper. I think the coasts are still going to be much more. So I'll be curious if you guys are indeed paying $3 a gallon. You can let me know on that. This is also gas prices were another bright spot. Okay. Holding relatively steady and avoiding surges that make Americans sour on the economy. OPEC increased oil output, so that's not necessarily Trump has any control of OPEC, right? Leading to more supply in the market, and the U.S. avoided some of the seasonal price increases it usually sees, and tariff uncertainty grip the economy. Gas prices have been a source of consternation for U.S. consumers in recent years. Yep. Especially during the 2022 inflation increases and when the war in Ukraine and other factors caused volatility. Let's say here, a lot of us finally settled down, and that has brought Americans a year of remarkable stability, according to Gas Buddy here. Stock market is up, right? And it's actually keeps going up. My personal opinion on this thing, I again watch January and February to see what is going to go on with layoffs, and then see if this AI investment actually does pay off at all. If it turns out like all these companies are losing money, they're not getting any benefit, I would expect the market to at least not necessarily skyrocket like it has in the last a year or so, based on the performance of Nvidia and other the tech companies. And another one of the big Magnificent Seven we talk about a lot would be like Tesla, which is a massive bubble. The stock market soared this year, climbing about 17% as investors remained optimistic about the corporate earnings and the AI boom. Here in Korea, I think the last time I looked at it was the Kospi, or basically the Korean market was up like 70%. So just understand that at 17%, yeah, it's fantastic. But Korea actually, we actually had a crazy boom in Korean stocks. I think Japan had a pretty good one as well, and maybe China. I'd have to look again at the numbers though. The market's gains were partly led by big tech companies, which are benefiting from the technology and potential artificial intelligence, right? So this may be a bubble and don't make any money, then you're going to have a real weakness in the market, in my opinion. Despite concerns about the possible AI bubble, they talk about here, an economy increasingly divided between high and low income consumers, right? So the wealth gap. Analysts are hopeful that the stock market staying power will persist into next year. And then you got consumer spending. Americans are still spending, but with less gusto than before. And you can see that going down. The thing is the consumer spending thing is, the top 10% are making up a larger portion these days than in the past. So you could have a situation to where if the top 10% of consumers are, spending, say, the bulk of the money, that means like Elon Musk is out buying yachts and really expensive watches, but everyone else is not shopping at all. So you might see a real divergence there, and they'll probably talk about this stuff here. Here's a quote. We think a weakening job market, lingering sticker shock, higher bills on student loans, and restrictive immigration policies will limit any upside to spending growth from lower interest rates and tax refunds, Alice wrote this month. So basically we're talking about like how can we get people to keep spending, right? This is probably the big ones, and we'll read a little more of this. Some of this year's spending looks different, however. Americans scooped up more necessities during their early holiday spending this year, buying appliances, clothes, and furniture. Economists note that the gap between the highest earners and everyone else has recently widened as the economic stress begins to pinch the middle class and consumer confidence keeps falling. And that's the stuff you're going to see here. And then it says here, brisk consumer spending led by healthcare and recreational goods and cars made up more than half the latest quarter's GDP. So that's looking at the charts. Just want to go through the various things that we can talk about. I try to make different videos on different sectors of this stuff, but sometimes it's good to get an overview of what's happening. So that's my thoughts on this. I'd like to hear yours, and I will catch you all in the next video.